First impressions matter. A couple hardworking guys just want money. Being normal. Don't judge a book by its cover. Well, everything's pretty dead right now. Get our hands dirty. Our main values are we want to help.
Chris, thank you so much for joining. Welcome to Between Meetings. I'm really excited to have you on the show. We had to postpone once, but hey, it's still happening. It's still on, and I'm grateful for the opportunity to have you on the show.
Yeah, glad to be. Thanks for waiting as I cancel things, but yeah, glad to be here.
Please take me back to your early days as the investor and what actually made you interested in venture capital, and if there was the moment that actually pushed you to start Tallgrass Ventures.
Sure, yeah, I can kind of go back. So in my earlier career, I worked as an engineer in the energy sector in various countries in the world, and yeah, most of that time was spent in allocating capital into big capital projects. And in that time, I kind of developed a lot of understanding of risk management and how to execute big deals. And so kind of as I wound down that corporate career, maybe 5 or 6 years ago, I really liked the investing side of things. So, having some really structured decision making and risk understanding and taking a bunch of options and narrowing it down to the best way to return your capital. So as I got out of that, I started it's a little more convoluted, but dealing with startups, a little bit in social innovation, a little bit in AgTech, and just by myself and digging into that. Was involved in startup T&T a bit as an angel, so understood the whole process around that. And as I invested more and more into these companies, I kind of had a long-term ambition to put other people's capital to work alongside my own and build a fund. So I met this guy named Wilson, who's now my business partner, and he was kind of coming from a different background, ex-lawyer, ex-founder, and we just were at the right place at the right time together. And we're like, you know what, there's a lot of opportunity in agriculture. There's a lot of opportunity in venture capital going on right now. And it's like, let's just start working together and let's see if we can come up with something here. So probably 2 months after that, we gave birth to Tallgrass, and a year later did our first close, and then 3 years later, here we are. And so yeah, it's been a fun adventure, and we still get along, so that's good.
That's pretty cool, and it happened actually quite fast, right? From the day actually you decided to do it, and to the day you closed the first round. So you raised 32 million for the first round, which is exciting, and it's a huge milestone, and actually it's a huge achievement. A lot of the attraction of TVG is actually dedication to its values. But what actually does it mean when it comes to working with founders?
Yeah, so we have a mixture of values, and a lot of them come from, I like to say it's from just being normal, which some people, they don't get what that means, but if you're working as a founder, you get it. So our main values are we want to help, like it's our duty, right? Like we're in this to get our hands dirty. Some people call it high touch, but we're also not doing it from a board level all the time. We're doing it as a shoulder-to-shoulder peer model. So we're here to help. We want to be part of the team. A lot of people say collaboration is the value. I look at it a little more like teamwork. So if you have a hockey team, it's like you're not necessarily on top of each other all the time, but it's like someone's got to go in the corners, but someone's got to stay on the left side, catch the puck when it comes over. Everyone has responsibilities. So we like to take one of those spots and help out. And so some founders, they don't want that. They just want money. So we figure that out in due diligence. We're very upfront. It's like, this is how we work. Here's some of the people we've worked with. Talk to them. They'll tell you how it is. Yeah, we're a couple hardworking guys with a hardworking extended team. And yeah, we just want to pitch in and get you to where you want to go.
What's your main investment thesis? At what stage do you like to invest? And what is the average check size?
So what we invest in, we call it pre-Series A now. So it used to be there's a variety of names of stages. So in the last year and a half, everything before Series A, there's now like 10 different names for it. It used to be just seed and then Series A, but now there's like bridges, Series A, Series Plus, Series B. So we just say pre-Series A. Okay. We'll go fairly early. We have some like pre-seed type companies. We've got one holding. Maybe we were there almost at angel level. We thought it was such a good idea. We were in very early. So, but yeah, anything before Series A. Check size. I think that's evolved a bit. I would say now 600,000 Canadian is probably our average check. Earlier it was smaller as we were still doing our closes, but yeah, that's where we are now. But we've also gone higher than that, but that's the average.
When you review a company, what do you look for first? And how do you know if the founder is the right one to back?
Yeah, so the first thing I look for is just like a clear description of what your company does and who you are. I don't really worry about the slide decks so much. I mean, you give me a deck, I'll read it, but I want to talk to you, and it's an initial meeting. So I'm big on not judging a book by its cover type methodology, which there's two lessons in life that work against each other. Don't judge a book by its cover and first impressions matter. Well, I'm more on the don't judge a book by its cover. So explain what you're doing. I'll go back, is it a good problem? Is it a good solution? What's your business model? And then also there's some internal stuff, like we use a portfolio approach when we invest. So does our portfolio, can we handle a long-term deep science type company? It's like, well, yes or no, or, no, we're full, we need software right now. Okay, so there's some internal questions too. But in general, just a clear description of what you're doing for the first meeting. Yeah.
And in terms of the picking up the right founder, like, do you trust your guts, or you look at the numbers, you look at the history?
Yeah, so we take a long time to do investments in our due diligence because we like to get to know who we're dealing with. And people get in trouble a bit in the VC world by taking too long and dragging out due diligence. Well, we're doing it because we like to get to know you, and you should want to get to know us too. So we care about your background, both like education, but also like track record, we could say, or just like where did you work? What are you about? Why are you doing this at the company, and where do you want to take it? And we find just the startup world, there's a lot of, we'll say, avenues out there that work on polishing your image. And so when you take time, it also lets us get to know the real you, and how we're going to work together, and if it's going to work. It's like, there's lots of similes for it, but it's like a marriage, whatever, right? So we got to be careful. You should want to be careful, and I don't see a point in rushing these things, but some people like to rush it, but whatever, that's the way we do it.
Right. And especially with the early stages, right? It's really hard because at the early stages probably didn't have that much experience building companies. Maybe they're not serial entrepreneurs.
Yep.
So getting to know people is extremely important. And now with the AI, right, and with the tech skills and software building opportunities that is accelerated, how much actually you pay attention to the understanding the industry and having background in the industry versus just having purely technical things and executing on this?
Yeah, I think we're talking about market here and stuff like that in the broader sector. Like, that comes on a support side. So they may not need to know everything about it, but they need to know what they don't know. And that's where we can work with them. So we have a large network of people. We have a large internal group at Tallgrass. And everyone knows a little bit something, has a different subject matter expertise. So I think with all that, it allows us to understand what the broader market and broader outlook is for where this company operates.
And then leads to the next question. So ULP's limited partners include everything from institutionals to farmers to traders. How does that mix of investors actually help to build a strategy?
Sure. I think a lot of it's upfront, right? So when you're starting a fund and starting to fundraise, you've got a vision of what you're going to produce and what you're trying to do. But the early investors, and really all the investors, they're kind of like a customer at that point. So we're like an early stage startup at that point. And so we need feedback. So when you take our first pitch to an investor to our end product, they're not the same. And it's because we've got all this input from LPs on what they're looking to invest in, what they'd like to see. And then we shift our vision to fit that, right? If we just did it the way we wanted and didn't listen to anyone, we probably wouldn't get very much money. So, but yeah, so the end product of what you see in Tallgrass is a culmination of all the things these LPs wanted to see out of an investment.
Ag and food tech has the reputation of being hard because of the slow adoption, regulations, capital demands. So what are your thoughts on that?
Yeah, I hear that a lot, but like almost everyone I talk to says that. So my view of it is like there's a bit of a flaw in the logic around that, and it's like as compared to what, right? And I think a lot of the people lately I've heard say things like this is because they have a generic fund or a B2B SaaS type fund model. And so incorporating one ag tech company into that, it probably would have some of those characteristics compared to the rest of your portfolio. Like, because we are a full ag tech fund, we build our own model. So I don't think you should, for any venture fund, you shouldn't use these generic models out there, right? Like, I see a lot of funds, they're like, we are 100% power law model, and we're using this same spreadsheet for our fund model that everyone else uses that some guy in Washington made like 10 years ago. Okay, so with ag tech, you can't really do that. So we made our own model, right? And I mean, when you look at it compared to other types of venture investing, the exit sizes are a little lower in ag tech. So we built a model. We're like, well, if we're going to have our top 2 or 3 exits being not $1 billion, like every other venture fund tries to claim, well, then we need to reduce something like failure rates, right? So the old B2B SaaS model was, have 5% unicorns and 60% failure rate type of thing, and the unicorns carry your returns. But I mean, so because we're not doing that exact model, because it's ag tech, you just have to find ways to reduce failures. And ag tech's good at that. So when people say, hey, there's slow adoption in ag tech, well, there's also slow unadoption sometimes, right? So it takes a long time to grow ag tech companies. Well, they also fail a little slower, right? So that gives you options to get out earlier or to pivot a little bit more. And so at the end of the day, maybe you have less 0x's in your portfolio and you've got more 1x's, which makes a big difference. So then if you're doing full ag tech portfolio investing, you should be able to handle that, right? If you're diversifying properly within ag tech. And agriculture itself is like a massively complex thing, right? Like, it's not a business. Like, there's like 100 different types of businesses in there. So if you're going to go in and just do broadacre farm tech investing, well then, yeah, like, you're going to be exposed quite a bit to some things. I was talking to a few guys last week that were surprised we did an aquaculture investment in AgTech because they'd never viewed it as agriculture. And we're confused because we're like, well, we've always considered it part of agriculture. Um, so it's very interesting that way. And so we're a little more diverse than just what some people think we are. And some people just think we're what I call farm tech. But we're all across the spectrum. We've even looked at a bit of forestry stuff, right? Because forestry is not considered agriculture either, but it kind of, I mean, you're growing something. So it just, maybe it takes, your harvests are every, 25 years instead of every year. But so anyway, we haven't found anything to work in that yet, so no one get nervous. But yeah, keeping an open mind in this and making sure you have a model that works, then all these concerns can be dealt with, right? There's a lot worse stuff to be investing in this world, that's for sure.
So you invest mostly in Canada, but have holdings in 4 other countries. How does AgTech and food tech compare in those spaces that you have invested in terms of innovation, founders, and capital market?
Sure, yeah. So the thing about agriculture is it does not know borders or follow borders very well. I mean, unless there's like a mountain range at the border, something like that. But like in general, if you go Canada, US, it's like, well, they're kind of growing the same thing, between North Dakota and Southeast Saskatchewan and stuff. So we invest then or look beyond our borders to an extent. We're mostly Canadian because this is where we are, and some of our LPs, had some interest in us investing mostly in Canada. But as we look elsewhere, we found technologies that affect Canada positive because agriculture knows no boundaries. So we've invested in Israel, Denmark, and the UK, as well as the United States. And yeah, there's some differences in these places. So we were referred the deals in the large extent. So to go big into any of these countries, we'd have to go there and set up office and understand, the complexities of that country. But we don't have time to do that. So, or the resources at this point. But so, like, if you look at our Danish investment, while it was referred, we spent some time understanding the business culture of Denmark through contacts. So I knew some Danish people, so I could get a flavor of what was going on. I went there to see them, to understand how they operate. And we just had to get a comfort on, like, hey, are we comfortable dealing with a Danish company? There's some downsides with time zone and stuff, but some of the people in our team have a lot of international experiences. So I worked in Europe for years under a Calgary head office, so I'm used to dealing with late afternoon calls from people just getting to work and different energy levels at different times of day. So I mean, like any international investment, you just got to be careful. Founders are different. So, I mean, every country is a little different on what drives a founder and what drives the business. What is their, are they passion driven? Are they money driven? Are they duty driven? And it's different everywhere, right? So you have to just understand from that founder what's driving them and what motivates them, and like make an effort, right? And then also convey clearly how we do things in Canada too, so there's no misunderstanding. Because as everyone internationally knows, Canadians can get a little passive aggressive in their communication. So when you're dealing with like a Dutch founder or something, so I lived there for a while, and it was passive aggressive Canadian and super direct Dutch just require a bit of understanding of each other's way of communicating. So,
what are the big trends in AgTech and food tech that excite you most in the next 3 to 5 years? And what would be the advice that you would love to give to a founder who wants to start the business in this space?
Yeah, so I'm very excited about one recent development that's really fun to watch, and it's like AgTech has always been pushed by the lack of exits. And I think a lot of it's due to like AgTech is a like a sub asset class in venture capital is kind of new, right? Like it was a pretty niche historically, and just in the 5 years, last 5 years, people have started getting, big into it. It's becoming a bit of a buzzword, and it's kind of been sleepy though in the broader agriculture business sectors in the last few years. A lot of big corporate problems, stuff like that, restructuring. But you know what? In the last 2 to 3 months, it's starting to get noisy on the acquisition side, right? The exits are picking up a little bit. There's so much noise, there's so much tire kicking, and I think what I'm excited about is we're just coming out of a lull, and stuff's going to get real busy the next 3 years on the deal side of things as stuff gets sorted out. And I think we might be entering a new cycle because of that. So I'm pumped because when we got into this, it was like, well, everything's pretty dead right now. So it's a good time to get in investing because you have 5 to 10 year cycles. So like if we get in while it's quiet, in 5 years, we start peaking, and that's right about the time we'll be prepared to exit our investments. So what do I tell a founder like that's wants to get into this right now? Like, yeah, get into it. There's a lot of things out there standing in your way, but not all of them are real. Like some of them are just rules of thumb people are be following. Like if you got a good idea, good product, a good problem, there's always going to be money for good startups, no matter what the time is. If you're a good ag tech company, you're going to do well. So don't worry about the noise out there. Just worry about doing a good job, and hopefully everything else works out. So not for everyone. I mean, I'm not one of those just work hard and everything's fine. You'll need a little luck too, but.
Right. On this positive note, I want to say thank you so much for this insightful conversation. I truly enjoyed it, and I wish you many successful exits.
Yeah, thanks. I hope for those too. Appreciate the time, Marion.